Hey everybody, this is Tim Dial with Nexa Mortgage, and I'm just putting this short video together. It's going to be very short, but I wanted to put this together just to give people an idea of what's going on in the market right now. Rates have been coming down nicely ahead of the next Fed meeting. What's happened is the Fed announced, or they didn't really announce, but they had a meeting in Jackson Hole. When they had their meeting in Jackson Hole, it came out that it sounded an awful lot like they were going to start cutting rates in at their September meeting. As a result, what happens is when that happens, the market actually gets ahead of it and they drop rates ahead of time. Chances are when the rate cut actually happens, you may not see much movement because it already happened. So the other thing is that one of our biggest partners, or they actually are our biggest partner, United Wholesale Mortgage, started a special that they're running, which is 90 basis points ahead of this Fed meeting. So they're giving a discount of 90 basis points that gets us to an even better rate. But I wanted to go through this real quick and kind of show on the charts what we're looking at here. And what I'm sharing right now on the screen, or should be popping up any moment, is the 30-year bond, what it's been doing. As the 30-year bond price goes up, interest rates come down. You can see we kind of hit a peak here, then we hit another peak here, and now we're up to here, and we're trying to break above this line of resistance. And if we do that, we've got a lot more room there. But this has caused us to enter a rate environment that gets us down into the high fives, low sixes, depending on credit score and program and things like that. Now, if you are doing something like down payment assistance on a first-time purchase, those rates are automatically higher. So I'm not talking about those types of loans. Those are a specialty program or product. But but as far as a normal program where you're providing your own down payment, like FHA, VA, conventional, those programs, we are in the the high five to low sixes depending on the program and things like that, and also depending on credit score. So that's kind of what you can expect right now based on this level. If this goes up to here, then we'll definitely be below the sixes once we're up into this range. So that's kind of what we're looking at. It's an exciting point in time to get started. If you do already have a mortgage, it's a great time to refinance right now. Last year when this happened almost identical. They made a rate cut in September, but from September through December, rates actually went up. Everything happened ahead of the rate cut. So the rates dropped ahead of the rate cut. Then once the rate cuts happened, rates actually went up, but that was primarily because of other factors like jobs reports and inflation reports. Those reports really hurt us last year in the latter part of the year. So we don't know what's going to happen with those things this year. I know tariffs have hurt us on the inflation front to some degree, but hopefully the markets will look at that as a one-time adjustment and not inflation that continues. So we'll just have to see how that works out. But yeah, right now is a great time to start the refinancing process if anybody wants to do so. I am taking new customers right now, so let me know if you're interested, and I certainly appreciate the time. Thank you. Have a great weekend and a great holiday weekend. Thanks.